Hello traders and welcome to another video review. Today is Friday, the 11th of December 2020, and we are going to take a look at the Forex calendar, and then of course we will do some appropriate technical analysis. So let's just swipe down towards the today's date, and we'll see what is going on the financial markets. During the London session, as we can see, we got some data from the Germany. We got CPI in harmonized CPI, which has not much importance on the market. At 8 o'clock, we got already the Bank of England financial stability report. It might influence the British pound. The data from the industrial production and the CPI from Spain are also low importance for the market. So as you can see, we might just jump straight to the US session, and we have a PPI, producer price index data here, 2:30. This is the time of the release, and the expectations are lower than the previous month. As you can see, 0.1% versus 0.3%. We got the University of Michigan inflation expectations as well, and then at 6:40 we got the Randall Charles speech. At 7 o'clock, the last event of this week is the Barker Hughes US recount for all of you who trade crude oil. This is kind of important data. So not much is going on today. We got some data on from the United States and some data from European Union, but they are not really that much of importance. So it seems to be a kind of a quiet Friday with not much real data influencing the price behavior, but I think we should see what is going on the euro to the British pound, and we should take a look at the SP500, Dow Jones, and maybe we will take a look at the Bitcoin as well. So let's just go and see what is going on the euro to the British pound. As you can see, after the yesterday's interest rate decision and the meeting, of course, and the conclusions from the meeting, the market participants decide to buy the euro and sell the British pound, and this big candle here with a long upper shadow has almost been retraced. There's like a 1 or maybe 2 pips missing here. The high of this big candle from the yesterday is at the level of 9,141 pips, and if today we are going to continue this move higher, then the next target is 9,156, of course, and then 9,220. The key level for the bulls is 9,291 pips. So if we break above this level, then of course the euro to the British pound will be in the new uptrend. It's worth to keep an eye on this. The intraday technical support is right now seen at the level of 9,115 pips, somewhere around here. So any breakout of this level will lead to the test of 9,068 pips. So right now on the euro to the British pound, we are continuing this breakout here above the trend line, and after yesterday's data the market decided to go even higher. So if the bears will not cap this move again like they did here, then the higher levels are possible, and the technical resistance possibly will be violated. Alright, that was the euro to the British pound. Now let's take a look at the S&P 500 index. So what do we have here? As you can see, the level of the 3,670 and the previous high had been violated. We got the new high, and the new high was made at the level of 3,714. So this is our new high, as you can see here, and this is our point of reference right now. What is that price pattern here? This is the bearish engulfing pattern. So right now we have a first indication of the bears trying to take the control of the market and either push the market lower in a corrective move or even start a new trend down. As you can see, we are trading very close to the level of 70 on the RSI, which is the overbought level. It indicates the overbought market conditions. So it's a very good place to start selling overpriced assets. As you can see, the bulls are still fighting for the price. So right now we got this short-term trend line, and we bounced once, and we bounced yesterday as well. We will see how the market will react on this bounce, because if we will break lower below the trend line and below 3,640, then of course the next target is 3,589, and we will get this reversal here. The question is whether it will be corrective or whether it will be a beginning of the new trend down. The key zone, we can even make it here. The key zone for the bulls that they don't want to lose, of course, is that zone. Let me just do the background in green so we know this is the support zone. This is the zone between the levels of 3,529 and 3,549. So that's 20 points a level. This is the key level for the bulls. So right now we can just point it out with our blue arrow, right? So this is the key level, the key zone, basically, for the bulls. If they will lose it, then the market will most likely start deeper correction or even start a new trend down. So please keep an eye on this level. So that's the SP 500. Let's take a look at the Dow Jones Industrial Average. This is very similar situation to the SP 500. As you can see, we got the trend line here, the short-term trend line as well, that supports the market move up. And recently we've done a new higher high, right? So we got this high here. Let me just change the color. But this price pattern looks like a wedge. So it looks like a kind of a formation that might very easily be terminated soon, and the price will start either a corrective move lower or even a new trend lower, right? And the situation is very similar as it is on the S&P 500. As you can see, this is again the zone which is the most important for the bulls, right? This green zone. It's located between the levels of 28,959, 29,197 points. If this level is violated, then we will most likely go lower very fast. So please keep an eye on this level. After this falling wedge will get resolved, and the price will of course go lower towards this two levels, right? So tricky situation for the bulls right now. Of course, we are very close to the level of 70. We are trending, as you can see, at the levels between 60-65. So this is those market conditions are overbought. They are not extremely overbought, but are just overbought, and maybe we will get some kind of correction lower. Of course, we can bounce from the level of 29,197 and go higher. So please keep an eye on the price action around this level. And the last thing I would like to show you at the end of this technical analysis section is the Bitcoin. As you can see, I got my 5-wave impulse that is right now about to finish. Please take a look at the previous analysis. You will see you will see what was my idea. The idea was that we will continue the fifth wave here, and of course we got a new higher high above the high from the wave of number 3 from the third wave. So it's apparently everything by the book, and right now I guess this is completed. This big 5-wave structure is completed, and we are starting the corrective cycle lower. The target is somewhere around the level of 16,281. Let me just put it on the chart. There you go. There is somewhere here, and other target is 15,831, right? So this is the zone. Oh, let's make the zone again. This is the target zone for the either for the first wave of the correction, or for the whole correction of this up move, right? If we just get one more thing here, that would be the Fibonacci retracement. We can see that if we just make it here, this will be only, I think it will be only 38%, if I'm correct. Yes, there you go. It will be just right on the 38%, $16,049. So very strong area of a support and retracement. But if this one is violated, 50% is 14,864, and 61% is just below the technical support, and it's located at 13,679. So please keep an eye on the current developments on the Bitcoin. It looks like we are going lower to complete the corrective cycle. That's everything for me for the end of the week. Thank you very much for watching this analysis, and I hope I see you guys next time. Bye bye.